I think silver is definitely performing even better than gold more recently. I have a feeling that silver is long overdue for a big move. I have a feeling silver is going to start to really outperform gold here moving forward. And I'm of the view that this could be very interesting for silver investors, because it's, in my opinion, it's a matter of time for us to see the prior highs being taken out. And so I think we're getting close to something big here.
Gold prices have consistently reached all-time highs this year, yet consumer demand for the precious metal remains strong. What sets this year apart is the noticeable shift in preference between gold jewelry and investment-oriented products like coins and bars. Consumers are gravitating toward the latter, which comes with minimal processing charges, highlighting a more investment-focused approach. Meanwhile, silver's recent surge has pushed it to its highest level since May. To confirm that the next leg of the bull market is underway, silver now needs to close above its key resistance level of $32.50 with strong volume. Tavi Costa, partner and portfolio manager at Crescat Capital, shared his thoughts on gold and silver's recent price activity, noting that many people often reference 2008 when gold prices initially declined but later surged. From a broader perspective, Costa believes markets tend to swing like a pendulum. He emphasized that equity markets have stretched their valuations to extremes, and if a major reckoning occurs, stocks could face significant declines. While he admits gold may have gotten ahead of itself after its recent big move, showing signs of being overbought, he doesn't think we're in a bubble. Interestingly, while gold saw a 25% increase this year, silver performed even better, rising by around 27%. Silver often mirrors gold's movements, but in a more exaggerated manner, meaning it can rise faster, but also fall more sharply. Recently, silver experienced a significant correction, influenced by a dip in demand from China over the summer. However, this situation is stabilizing. Tavi Costa holds a more bullish view on silver. He believes that silver has been outperforming gold recently and is long overdue for a significant move. In his opinion, silver is poised to begin significantly outpacing gold, and it's only a matter of time before silver surpasses its previous highs. Let's get into the details. If this video is helpful, please like and subscribe. Currently, 11% of you are subscribed, and we're aiming for 1,000. Your support will make a big difference.
I think you don't want to be too cute on those fluctuations in markets, but a lot of people like to talk about '08 as an example, right? '08, gold prices declined initially and then went up a lot. But that's not the only scenario we saw. I mean, the early 2000s, the miners went up when the tech bust was still developing. In the 70s, we also saw the miners going up. I mean, that would be unthinkable today, right? I mean, who would make that call and say, hey, miners are going to go up as the market crashes? I don't think anybody would agree with that today. I love the contrarian views on those things. I don't know if it's going to happen, but it's something that nobody agrees with, right? I mean, I don't know of anyone really, pounding the table saying miners are going to go up as the equity markets go lower. So that's, those are interesting ideas. My view is that, I've always think on a pendulum perspective. I mean, if things have, really gone very far on the pendulum in terms of valuations in equity markets, so how much can we fall on that front if we see a real reckoning moment? A lot. And how much can we see a fall in metals and other things that are historically undervalued? Probably not a lot. And so from a relative standpoint, I find it attractive to still own those things. Now, do I think gold has got slightly ahead of itself recently? Yeah, I do think so. I think gold had a big move. I mean, most of the even more technical indicators are showing that has been quite the move for the metal. Now, does that mean that we can see a large correction? No, it doesn't mean that. Doesn't mean we're in a bubble or anything like that. But we could see a consolidating period before another big move, and that would be just normal. That would be hopefully very healthy as well to kind of take away a little bit of this expectation that gold prices will only go up from here. And gold prices can fluctuate too. So I can see that happening here. I know we're seeing a down day today, and I think that could be, we could easily 5-7% declines on the way up, and that's just normal part of the game. Now, silver, I have a different view. I think silver is definitely performing even better than gold more recently. I have a feeling that silver is long overdue for a big move. I have a feeling silver is going to start to really outperform gold here moving forward. And I'm of the view that this could be very interesting for silver investors, because it's, in my opinion, it's a matter of time for us to see the prior highs being taken out. And so I think we're getting close to something big here.
Inflation typically has an indirect impact on the prices of commodities like gold. As prices rise across the economy, investors may buy more gold and other precious metals to preserve the purchasing power of their dollars. While the numbers showed that inflation slowly continued to moderate, housing-related costs remain an issue. The shelter component of the CPI, which has about a 1/3 weighting in the index, climbed 0.5%, accounting for about 70% of the core increase. The shelter index was up 5.2% year over year. While some may question the use of CPI, Tavi Costa believes it's noteworthy that both gold and silver prices, when adjusted for inflation, have followed nearly identical trajectories. Costa is confident that both metals will eventually surpass their previous highs, even when adjusted for CPI or inflation. Despite the ongoing debate about how CPI is calculated, he emphasizes that it shouldn't be ignored. CPI remains a critical macro factor for understanding broader market dynamics, as it influences policy and investment decisions. Let's now turn our attention to the video again.
If you look at the silver price behavior versus gold adjusted for CPI, I know people are going to say, why CPI, Tavi? But it is interesting. You just got to say that it's interesting, at least, that they follow each other exactly the same. Like, both have not taken out their prior highs, and they both have this massive cup and handle on the chart. I find that interesting because I myself, and I think everybody that follows precious metals, tend to say, well, silver is the more volatile version of gold. And it's true. But it is interesting as well that silver is almost like gold adjusted for inflation in a way. So I find it an interesting way as well to sort of think of the metal in that front. But I do think that cup and handle is real, that massive cup and handle. And it's one of my favorite technical formations. A lot of people overlook that because it looks so simple and unrealistic, just because it looks so simple. And in Wall Street and investments, we just tend to overcomplicate things. But I think actually cup and handle formations make a ton of sense historically. And even if, and I don't want to go into this, but even when you think of your own life, your first decline in life, your first decline in the first dip professionally, for instance, or personally, can be a bad one. Your second one will probably not be as bad because you're more prepared and it changes how your behavior would be under the same level of pressure you had before. And so I actually think cup and handles psychologically make a lot of sense. And again, not to get into that too deep, but if so, I think we're going to take the prior highs in silver. I think we're going to take the prior highs in gold adjusted to CPI or inflation. And that could be really interesting. Now, I mean, keep in mind, I'm not saying CPI equals inflation here. I'm just saying that we just haven't seen that measurement. And for investors who actually put money into things in general and deploy capital, CPI does matter, right? I mean, that it can move policy, it can move a lot of things. So despite the fact you may disagree with the calculation, you have to consider it as one of the macro factors on your side to understand the market. And so I actually disagree with a lot of people that just ignore that. If policy making is has such a high relevance to that metric. You have to at least consider. You can put a lower weight. I do to that significance of that index, but it still is relevant. It still should be used as part of your research.
As we move into the final quarter of the year and approach the U.S. presidential election, the potential for silver to outperform gold is growing. This is largely due to expectations of a weak dollar, which should support gold prices. However, silver, currently priced just above $30, remains well below its 2011 peak of $50, making it an attractive option for investors. Those looking to enter the market for investment metals may find silver more appealing because of its lower price compared to its historical highs. According to data from the World Gold Council, gold prices have risen by 12% in the first half of this year, with prices consistently surpassing $2,300 per ounce in the second quarter. Do you expect the dollar's weakness to continue? And how do you think it will affect the performance of silver and gold? Share your feedback in the comments below. If you found this video useful, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.